Have you started dropshipping, or are you considering getting started with dropshipping, but you're concerned about how taxes will affect your business and what you need to consider for taxes with a UK dropshipping business? Well, this video is for you. So you'll be confident that you know everything you need to know and of what's expected of you when you start a dropshipping business. Firstly, if you're new to the channel, my name is James Eardley. I run multiple dropshipping businesses and I've done over £800,000 worth of sales to this day. So I'm not a tax professional, but I do run dropshipping businesses, so I have an understanding of the taxes that we need to pay and what we need to do in terms of making sure we can make this run as efficiently as possible. So we'll go through that in today's video. As I mentioned, I'm not a professional, I'm not an accountant, I'm not a tax professional. So for advice that is more specific and tailored to you, I would recommend that you go ahead and find an accountant. Specifically, an e-commerce accountant would be best, so you can speak to somebody that really is familiar with dropshipping and Shopify. But any accountant you'll be able to have a conversation with, explain all of your numbers to, and they'll be able to give you real specific advice. But in today's video, I'll talk to you about the different types of tax that we are liable for, that we will be expected to pay, so that you know what to expect and you'll know what to do from today onwards in order to be compliant with the taxes that you need to pay in the UK. So the first thing to discuss when it comes to what sort of taxes you'll be paying for your dropshipping business is the legal entity that you will be using to run your dropshipping business through. So if you have not set up a company, if you're not operating with any sort of company or partnership, anything formal, then you will default and you'll be operating as a sole trader. So that's the way you operate if you just open up a Shopify store, start making sales. Any income that you generate from Shopify store, from the dropshipping business that you've got, you'll be taxed as a sole trader. And so that is going to be very different to how you'll be taxed if you set up a limited company. Now, I've always run my dropshipping businesses through a private limited company that I've set up with Companies House. And so that's where my expertise is. So I'll talk to you about the taxes that are applicable for you if you have a private limited company. I've also got a video on my channel if you want to learn about why or whether you need to set up with a private limited company as a dropshipping business. So I recommend you check that out if you're not sure what type of legal entity to be set up as in order to start and run your dropshipping business. But the short and long and short of it is that I recommend you to be a private limited company. And so you can do that with Companies House for, I think, £12 it costs. You can do it in about half an hour on the Companies House website, and you can have your private limited company set up ready for you to start dropshipping. Now, what does that mean for tax? So with a private limited company, you will be liable for corporation tax. So not you personally, but the business will be paying corporation tax. And at the time of recording, that means that between 19 and 25% of the profits that you generate, the net profit at the end of every year, will be taxed. 19 to 25% will be a corporation tax bill that you'll pay. So that means as a business, you need to be considering the fact that you will be paying 19 to 25% of your profit over to HMRC. At the end of each taxable year, you'll be paying that. So that's the first one to be aware of. So corporation tax, you will be liable for that. Fortunately, the good thing about paying corporation tax is you do get some time to get your feet under the table, to generate sales first, and you only need to start to think about your corporation tax return after the first 12 months of trading. So you've got some time. But if you're getting close, or if you're near to that 12 months of trading, it's time for you to contact an accountant, give them all of your numbers, and then you'll need to do a corporation tax return for that private limited company that you've got set up. The second type of tax that is really important to think about when it comes to dropshipping is VAT, so value added tax. So VAT is very different to corporation tax, so it's very different to consider. So in a nutshell, VAT is a tax that you'll pay once your business is generating over £85,000 worth of revenue over the course of a 12-month period. So before your business is generating 85 grand in turnover every year, you don't need to be VAT registered, and that's the threshold. So if you're underneath that, if you're not generating 85 grand a year in sales, then you don't need to worry about being VAT registered, and you can skip through this part of the video because I'd suggest that you don't need to get registered for VAT unless you're at that threshold. Now, for everyone else that is generating or planning to generate £85,000 or more, you'll need to register to become a VAT registered business. So this is what I've done, and the process doesn't take long, probably again about half an hour on the HMRC website. So what do you need to consider in terms of VAT? So as soon as you become a VAT registered business, you'll need to include VAT with every single sale that you make. So any money that comes into your business, as a VAT registered business, you'll be including 20% VAT, because it's a 20% VAT rate at the time of recording, in your sales. So all the money that you generate as a business, you'll need to include VAT, unless you're selling VAT exempt products or multiple other reasons. But the overarching rule, and to keep it simple for this video, if you're a VAT registered business, then the money that you bring in, VAT will have to be included in any sales that you generate. Now, on the flip side of becoming a VAT registered business is that you can also reclaim any VAT that you pay to a VAT registered business. So that means for a dropshipping business, anything you pay to your supplier, if your supplier is a VAT registered business, then you can reclaim the VAT that was charged to you when you're purchasing products from that supplier. So you lose in one way, where you have to give back the VAT to the government that you took in for your sales, but you win in another way, where you'll be able to reclaim the VAT that you've paid to other suppliers. So what happens for VAT registered businesses is, after 3 months, is the way I do it. So every quarter you'll complete a VAT return, and it will be worked out how much VAT did you take in as a business and how much VAT did you pay to your suppliers and to various other tools that you use that VAT was included on. You'll work out, so what it will be at the end of a 3-month period, you will have sold more than you will have purchased from your suppliers if you're a profitable business. And so you will have a VAT bill to pay, because you will have taken in more VAT than you paid, and therefore you work out how much did you take in versus how much can you reclaim, and what's left over is how much VAT you owe at the end of the quarter. The VAT returns that I get done, and also the corporation tax returns that I have done, is all done by my accountant. So I'm not an expert. They will take care of it. As a business owner, you just need to be aware of the taxes that you'll need to pay, and you need to have an eye on the numbers. You need to know how much you will need to pay. The next type of tax that we'll discuss is imports and customs tax. So this will be applicable if you import any products in from suppliers outside of the UK. So I only work with UK suppliers, apart from a few exceptions, but generally I always want to work with UK suppliers so I can make sure that products get to customers quickly, and it's very simple in terms of admin. One of the reasons I don't work with many suppliers outside of the UK is that you'll need to pay customs tax to get those products into the UK. So I'm not an expert on that, but just be aware, if you work with any suppliers outside of the UK, you may be liable for customs and imports tax to get those products into the UK. The specific type of dropshipping that I follow makes it very simple. It also makes it very fast delivery, because the products are already in the UK, and it's called the Home Turf Advantage model. If you want to read about that model, there's the first link in the description. It explains, in a book by Lewis Smith, it explains how that model works. So I thought I'd drop that in there so you know, if you want to get into this type of dropshipping that I do, have a read of that book, and everything will be explained in that book for you, so you can learn more about this type of dropshipping that I do. Now, the next tax to consider is income tax. Income tax is different to corporation tax. It's very different to VAT, because income tax is the tax that you pay on the income you generate as a person. So this is separate from the corporation tax you pay. But any income that you get, so the money that the business pays you as an employee, you'll need to pay income tax on that amount. There is an amount of income that you can take in before paying tax on that. And also you can change the way that your business pays you. So it's not all salary. You can take dividend payments up to a certain level that are tax-free as well. And so you need to speak with an accountant to make sure that you're doing everything in the most tax-efficient way possible. So it's a little bit complicated, because you are the business owner, but you're also an employee, because from the business, you will pay yourself as an employee. And so you organize the business taxes that the business pays, but also as the employee, you are being paid by that business. And so you need to also pay income tax on the tax that you have been paid by your company. For all the specifics and to make sure it's set up in the best way possible, I'm not the best person to ask. An accountant is definitely the best person to ask. So get in touch and they'll explain to you, like they did with me, essentially the best way to get paid as an employee of your own business to make sure that you're being as tax efficient as possible. Now, something important to speak about when it comes to tax is that as a business, there are certain expenses that are deductible from your profits. And so it makes sense for you to declare the payments that you make as a business that then get deducted from your profits, and so they lower your tax liability. So things for a Shopify store, the obvious ones will be the marketing spend. So the Google ads, the Facebook ads that you use, you can deduct those as deductible expenses to reduce the amount of profit your business makes, and therefore to reduce the amount of tax that you pay at the end of the year. So the best piece of advice I can give you to make sure you can declare all of the expenses that you've paid is to keep really meticulous, high quality records of every expense that your business pays. The first thing to do when you set up a business is to set up a specialist business bank account so that you have it all separate from your personal finance. Then you have bank statements that only show the expenses of the business, and in amongst that isn't your personal spend at all. So that's a clear way of keeping track of all the expenses that you spent as a business. So do that from the very start and you'll thank me later, and also your accountant will thank me as well. Make sure everything's kept separate from the very start. As well as your bank statements, also recommend you use software, use tools to track the expenses that you incur as a business. That way you know that you can reclaim all that, and so you reduce the profit that your business generates, and that will reduce the amount of tax that you pay. So keep really good records from the very start. Common pitfall that I see people make is not keeping a clear eye on the numbers. So you need to keep an eye on how much you're generating, of course, how much sales you're making, also how much your suppliers are charging you, so you know how much profit you're making in between every order. But the key one really is to know how much you're spending in marketing to acquire each of those new sales. So a sale isn't free. So every time you generate profit for your business, you will have used a marketing spend to generate that sale. So you need to have a really close eye on the numbers. A pitfall that people can make is that they can overspend on the marketing to generate those sales. And it's only when you have a big marketing bill, a big Google ads bill to pay, you realize that you weren't as profitable as you thought you were. So keep a close eye on the numbers. Another mistake that people make, and this is more specifically for VAT registered businesses, is that they don't keep money to one side when they're generating sales. When you're VAT registered, you need to understand that the money that you bring in isn't all of yours. Some of that is the government, because some of that is the VAT that you've brought in as a business. So you should keep away that 20% of each sale to one side and make sure you don't spend it. So when it comes time for your VAT return, you've got that money to one side, whether that's in a new account or wherever you keep it. Make sure you've got that earmarked for that VAT return that comes around every quarter. And the final point to hammer home on today's video is there's a certain peace of mind that will be given to you when you work with a tax professional. So when you hire an accountant to work with your business, it allows you that peace of mind that somebody else is looking at the numbers and has expertise over tax and what tax you'll need to pay. So give yourself that peace of mind by reaching out to an accountant, working with them so that they can explain everything that you need to do. And it's well worth the investment. There'll be a monthly fee to pay to the accountant, but for the amount of headaches that you'll save by working with them, and they'll complete your tax returns, they'll complete the VAT returns, you'll save so much more in terms of headspace. That headspace will then be freed up so you can focus on generating more income for yourself and your business. So, reminder, this isn't tax advice, this is just my advice as a business owner, so you know what sort of taxes to be aware of. I hope this video was helpful for you. Remember, if you're interested in the dropshipping model that I use, I recommend reading the book from Lewis Smith about how to get started. And if you've got any questions, let me know in the comments. And for more videos related to dropshipping and making sure you know everything you need to know about running this type of business, then subscribe, give it a like. And I recommend the next video that you watch after this is the one all about related to whether you should set up your business as a limited company or not. So you can click on that video now.